What if the U.S. government is quietly building up a huge crypto reserve while saying that digital assets don't matter? It may sound impossible, but more and more proof is coming in. From time to time, the U.S. has taken Bitcoin, Ethereum, and other cryptocurrencies worth billions of dollars from illegal groups. However, a lot of it is still missing. Behind the scenes, officials are often pushing for tighter crypto rules. They could be getting ready for a big financial change that could completely change the global economy. With blockchain technology, some people think this could be a new Bretton Woods moment, a turning point where the U.S. resets its banking system. Things might get even more interesting now. XRP could be a key part of this change. Ripple has been working with banks for a long time, and governments all over the world are already testing its system for making payments across borders. Could the U.S. be gathering crypto assets in secret to get ready for a big financial reset? What does this mean for XRP and its future if it's true? Let's take it all apart. The U.S. government has done a few things that make it look like it might be secretly hoarding cryptocurrency, even though it is publicly calling it fake. One very clear sign is that government agencies are using a huge number of cryptocurrencies. The U.S. government has taken billions of dollars worth of Bitcoin, Ethereum, and other digital assets from criminal groups, dark web markets, and scams over the past 10 years. Some of these assets have been sold at auction, but blockchain tracking firms say that a lot of them are still in wallets owned by the government. How the crypto space is being regulated is another important hint. To begin, groups such as the SEC and the Treasury Department often stress the dangers of digital assets and push for strict rules. On the other hand, groups with ties to the government are looking into blockchain technology. The Federal Reserve has been looking into the possibility of a central bank digital currency, or CBDC. At the same time, the U.S. Treasury has been working with blockchain companies to make sure that digital assets are legal. And if crypto really was a threat to the financial system, then why is the government working so hard to make it better? Blockchain analytics firms also say that a lot of cryptocurrency is stored in wallets linked to government institutions. Even though no one knows for sure what these interests are for, they do bring up some important questions. Is the U.S. collecting crypto assets on purpose to keep its financial dominance? Could it be getting ready for a banking system based on digital currency? If so, this could be very bad for the world economy, and XRP could be at the center of it all. We should learn more about why the U.S. might be hoarding digital assets and what their final goal might be. If the U.S. government is buying cryptocurrency in secret, the big question is why. Just what could be the point of this plan? There are many options, and all of them would have huge effects on the economy. One reason that stands out is that the U.S. is getting ready for a digital dollar. Electronic money is being looked into by central banks all over the world, and the U.S. does not want to be left behind. The government could be setting up digital reserves to back a future central bank digital currency, CBDC, by hoarding crypto assets. This would make sure that the dollar stays the most important currency in the world while giving the U.S. more power over blockchain-based transactions. Global competition is also a big role. China and other countries have already made a lot of progress with blockchain and digital payments. For example, the digital yuan is being tried in real life. If China gets too powerful in the world of digital money, it could make the U.S. dollar less valuable. The U.S. may be getting ready to counter China's growing power by collecting crypto and studying blockchain technology. The United States might have a strategic edge in the digital economy if it controls large amounts of Bitcoin, Ethereum, and maybe even XRP. Also, there is the matter of cash power. The dollar's role as the world's reserve currency has helped the U.S. keep its economic power over the years. But traditional banking systems are under a lot of stress because of rising debt and inflation. Crypto assets, especially ones like XRP that have a lot of uses, could be a part of a bigger plan to change the way global banking works. If the U.S. adds blockchain technology to its financial system, it could open up new ways to handle liquidity, keep the economy stable, and even have an effect on the world market. But what does this all mean for the chance of a fresh start with money? We need to talk more about how this could be another Bretton Woods. If it's true that the U.S. is hoarding cryptocurrency, it could be setting the stage for a financial restart that could change the way money works around the world. The last big change in the economy happened in 1944, when the Bretton Woods deal made the U.S. dollar, which was backed by gold, the world's most important currency. But that system fell apart when the U.S. stopped using gold as money. Instead, the dollar was backed by trust in the U.S. economy instead of a physical object. Now that the national debt is going up, people are worried about inflation, and digital assets are becoming more of a threat. Some people think we are about to go through another big change in the economy, and blockchain and crypto could be very important in this. A financial reset might mean switching to a blockchain-based money system instead of the one we have now. It's possible that the U.S. could use its big crypto assets to back a new type of digital currency that might be tied to a U.S. issued stablecoin, or CBDC. This would keep the government in charge of money while also making sure that the switch to digital money happens the way the government wants it to. Some experts think that if the dollar stops being the world's reserve currency, the U.S. could use its crypto funds to help keep a new financial system stable, which would keep the economy from falling apart completely. But there's another interesting angle. Could XRP have something to do with this reset? Ripple's technology is already being tried out for managing liquidity and making foreign payments. XRP could be very important in a new financial system if banks and other institutions around the world start to use it as a bridge asset. Now the question is whether the U.S. government sees XRP as a threat or is it secretly getting ready to gain from its use. We should look at how XRP fits into this bigger picture. For a long time, XRP has been seen as a bridge exchange for international trade because it allows for quick, cheap, and easy payments. What if, though, its part is even bigger than we think? Ripple has already teamed up with banks and other financial institutions around the world, and central banks are testing its technology as a way to make digital payments. If the U.S. government wants to restart the economy, XRP could be one of the most important tools they use to make it easier for people around the world to send and receive money. Bitcoin is often thought of as digital gold, but XRP is made to be useful in the real world's banking system. This makes it a great choice for a money change driven by blockchain. The current fight between Ripple and the SEC is one of the most clear signs that XRP could be a part of this change. Many people think that the SEC's fight to label XRP as a security is less about following the rules and more about keeping people in line. Wouldn't the U.S. government try to stop XRP if it thought it was dangerous? However, if regulators thought XRP would be useful in a future digital banking system, they should make sure they had some say over how it was used. The result of the lawsuit could mean the difference between XRP becoming a major part of global finance and being pushed aside so that alternatives backed by the government can take the lead. Also, since the U.S. government sees XRP as an asset in a future digital banking system, it makes sense for regulators to keep an eye on how it's used.